let us have a quick look at Forex strength.
Wait. Matron, take them away.
And a warm welcome to one and all. And if this is your first time here, the overgrown child, that is the Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do crack a like. Have a little look down here somewhere. Find the subscribe button so you can see future updates. And we'll crack on. So why strength? What's all this got to do with Forex? Because surely you just rock up and press a button. No? That's what this guy says you do.
You ding-dong! Bring on the dancing girls. Get rid of this idiot. Fuck you. Off.
No, it's not quite as simple as that. There are no magic pills, guys. And there is no wonder system either. If you want to survive in trading, it's common sense and a lot of filters. And for me, strength is a good filter. But you've got to be able to read what's going on within the strengths. You can't just have a strength meter and go, well, that's strong, this is weak. What's going on? It doesn't quite work like that. So what I'm going to do is I'm going to pull up a few examples where you can find strength for yourself. And I'm also going to show you mine and how I use it. Now, where's this all come from? Well, if I flick it over onto sort of the Discord here. This is a Discord I moderate, the Scruffy Squad. And if you're interested, you will find all the details about it down below, because it's where I go through my personal trading and build a community with the guys. Now, one of them, Dusty Bin, Gary, little salute to you, my friend, is very curious about strength and asked if I would do a video of it. I'm very happy to, you know. And what I do for these, just as a run forward, is I put on my strength every morning for them, because when I work it out, it's all filtered into a simplistic way of looking at it. And I'll show you the engine, which can be a bit confusing if you don't know what you're looking for. But basically what it does is it'll tell you the strength, it'll tell you the change of strength, but more importantly, it picks out the products that are going to move on the day. And that's what this is. And then it also looks at the majors, which move every day regardless of what's going on. And it'll work out which is the best there as well. But I do take it a step further, because when I'm trading, and if you watch my videos, they're all in the moment trading. And these guys see what I'm trading before I trade it. And I do it two ways. The first thing that I do is it comes into here. So they already know. So if I just go back a little step. Okay. So if you saw the videos I was doing a couple of days ago, it's Sunday now, so this would have been Friday. 7 a.m. telling them that I'm looking to buy the DAX. It's telling me it's good to trade. And then the other two that I was kind of interested in, because as you can see, I was interested in that and that, which is then filtered into here. There was no trades ready for them. And this is where sometimes strength falls down, because just because it says it's ready doesn't make it say you've got to jump straight in. You do have to wait and trade the conditions. And this is what I'm going to get onto. Now, as we move through the morning, they now know that I'm in trade with the DAX. And I'll show you something about that in just a second. It's now telling me that the Aussie is ready to trade. So I can now start looking for trades on that. And then as we go through, I have completed the DAX, and I'm still looking for a trade here, and it goes on throughout the day.
Isn't that logical?
And then I take it a step further for them as well. So all they're seeing sort of the running order on the sheets, because I update that on the top of each hour. We constantly chatting amongst ourselves, but I like to sort of preempt what I'm going to do, because it's very easy to say I've done this after the event. It's a little bit harder to do it beforehand. I mean, I don't have one of these, but what I do have is common sense. So even though the guys are chatting amongst themselves, which they do, and I'll just quickly flick this through before I get on to what I'm going to show you. See, we do have a lot of merriment, rags and riches, lift us up, but we talk swing trades, commodities, Forex trading, indices trading, even a little bit of crypto, into the news, you name it, even prop firms. We lift in all the time. Right? And what I'm driving at is the strength is all driving what we do. But that's only one part of the puzzle. What's the second part? Well, the second part for me is, as I was saying, very easy to say after the event. It's a little bit harder before the event. Now, the DAX trade that was highlighted on the sheet was discussed the day before. So I told them the day before I was doing it what I was looking for and the conditions. And within these videos, and there's another one here I've done for oil for Monday coming. Prior to that, you can see the trades that I take. I do a little snapshot of the how and the why I'm going to trade it, because that's as important as the trade itself. So when they see that I'm in a trade, they already know what I was looking for and why I was looking for it beforehand, and the target structure, etc. So I can't be any fairer than that, guys.
You serious?
And what it produced, well, if we flick through, we can start seeing that I'm sort of working out what's going on. And there you go. On the 17th, there is the DAX trade that was done. And then on prop, we were looking for the Aussie. There is the Aussie, and it generated 1,000. So I know my sheet works and I use it religiously, and I'm happy to sort of do all the calculations and share it with these guys. Okay. But the question was, what is it? Why is it? Well, there's a number that you can use. So there's a one here. Now, this is from live charts. You'll be able to sort of see it. I'll drop some links in the description for you. But what does this tell you when you're looking at this? You sort of think, well, the euro looks pretty strong, but the pound not so strong. Is it really saying anything? No, because it's not really giving you any real information. It's just a kind of a picture. So when I see these sort of things, they look nice, but they don't generate a great deal of information. You need to look at it a bit deeper. So let's have a look at something else. Now, this one's a little bit better. Now, this one's by FX Blue. What you can see a sliding scale. Okay. So you can theoretically say, okay, well, that's at this end of the scale. That's at the other end of the scale. Therefore, that is the pair I'm going to pick out. But again, it's just, it's not good, is it? It's difficult. So this is a simplistic one you can use. It's a nice, easy one. Okay, so if we flick it over onto Forex. Now, this is FinViz. Now, FinViz is really good for being simple and working out a strength. And why? Because you can visually see it in a flash. Okay, and the reason why I'm showing you these are like the different types. There's another type as well that looks like a load of lightning bolts, and it's just horrendous. I mean, it really is. But this one, you've got your heat map, so you can immediately see whether the pair is going up or down. Quite simple. Okay. And just to sort of illustrate, you've got the USJPY there, and it is bright green. So that's telling you this thing is on an upward move. Okay. And why? Well, there's the scale. The US is at the far end, and it looks like it's dipping over to come to green, because that's the way this works. Sort of below is red, above is green. And the JP is very, very low. Okay, so immediately you can look at that and you can work out what you're doing. Now, there's a simple way to filter this out. You can go, right, I want one base currency, and you either use the low or the high. So in this case, you can say, well, my base currency is the US dollar. So I'm looking for anything that the US dollar is paired against. Well, you're kind of, that is there, JPY. Boom. Or you go the other way. All right. And then you can start saying, well, I want the US against the Aussie dollar. And then you just go in and look to see what's happening with the Aussie dollar. And that is there. So for argument's sake, say the bottom three versus the top, or the top three versus the bottom. Personally, I think it's better to go the strongest is your base and then work from there. But as you can see, the Aussie is dropping, and that's confirmed there. Nice simple way to look at things. So mine, that you've just had a quick snapshot of, is this is just a, I'd call it a summary strength, because what it does is you can get confused by all of the numbers. And I'll show you for why, because my engine is pretty big. So I plug in quite a few numbers into this, but this is driven by a secondary engine, which is on this side. And there is God knows how many figures goes into it. It is really difficult. And the one thing that I do need is an anchor, something where I need a starting point. And your ATR will help you with that, but this calculates it all for me based on the formula that goes in. So I just need to tap in there, gold, and it starts auto-populating. Then I start keying in different numbers that I'm looking for, and it'll create a bias for me, which will populate all of this. Okay, very, very simple way of doing it. But when I'm looking at this, because once I put my numbers in, I prefer to do it myself, because as you've just seen with the ones that are on basic websites, they really don't tell you a great deal. And for me as a trader, I need information. And the information I need is that massive filter filtered into a small amount of currencies that I'm going to look at, or products. Because I will look at the DAX every day. I'll look at FTSE, look at the US 100, look at oil. Then I'll look at sort of, there's 28 pairs. If I was to sort of analyze every single one of them, I'd be at it all day. All right. So that's why this was created. And it's why these strength sheets that I've just shown you are important, because they can quickly filter you into a small basket. And then once you're in a small basket, that's what you'll focus your attention on. So the way I read this is very simple. I'm looking for the strongest versus the weakest. Okay. And this pick here will start picking out, it'll look at the top three versus the bottom three. It's not bothered about the middle ground. Why? Because I want movement. All right. And I know that versus that is going to move. All right. So that's the first thing I'm looking at. All right. Nothing to do with direction, just the movement. Then I'm looking at the change of strength. The change of strength is quite important, because this will tell me how violent that move's going to be, but it'll also give me a heads up as to how the direction's going to go. Right? So this will tell me the product. this will start helping me with the movement. Okay, so I already know it's the US versus the euro there and there, so it'll automatically put it into there, and it's position 1 because they are the furthest apart, and then position 2 for the US would be the pound because it is the next, and so forth. And I'm only really interested in the bottom 3, but there has to be a significant difference between them as well, which is why that's blank, you know, because just because it's a shade stronger doesn't mean to say it's going to move. It has to have a significant movement between them, and if it's not, just misses them out. Okay. Then you can look here and you can go, right, well, what's happening in the world? Well, the US is not doing anything at this moment in time. It's static. Okay. Well, if it's static, does that mean this is peaking out? In other words, is it getting to its upper top? So that gives you something to think about. And then you can look at this and think, well, that's lost a colossal lump very quickly. And what we do know is if a product is dropped significantly in a very short period of time, there's going to be what's called a dead cat bounce. All right. Now, you don't try and catch a falling knife, because that is just, well, let's put it this way. Why'd you call it don't catch a falling knife? Because it'll cut your bloody fingers off. So what you do is you let it drop, see some form of consolidation, and then it'll bounce back up, dead cat bounce. And now that bounce could be just a quick relief, like a snap, and you'll hear me call it a snap. But there are signs that you can see. You'll see it moving inside a Bollinger Band, which will tell you that that drop has ceased. Because while it's moving, all of your indicators are thrown out. They're a waste of time. So you have to look at your levels and see if it starts consolidating. Now, if it does start consolidating, then a Bollinger Band can help you, because you'll see it move from the outside to the inside, telling you it's slowing down. Right, okay. So we've got a theory here that it could snap back. And this can help you recognize it. So that's going to help you recognize a thumper of a move, whether it's be up or down. And then the consolidation can make you think. And then you're just looking for a criteria to get in, but correctly targeted. Okay. But it's all coming from here. The ideas are coming from here. So what's the next part of the puzzle? Well, you need to know which chart to look at, because if you're looking at a 5-minute chart, it's not holding a lot of weight. But likewise, if you're looking on a weekly chart, but you're day trading, it's so far away, it's not really going to give you any relevance right now. So you need a chart that can give you an overall picture, but also be quick enough that it's relevant for the conditions of today. And that's where this side comes into it. So in this case, sort of euro dollar, you just work your way down and it'll have worked out where to look at. So you will look at an hour's chart, and that's where you make your decision from. So what the whole process has done, it's filtered out into just a handful of products that can make sense. Then it's filtered it into the chart that you're going to look at. And then you make your decision. Now this section here, if I flick it back to when we were looking before, gives you a heads up of the direction. And the direction is based from the hours chart. So I hope that makes sense. I mean, the idea of what I was doing today is really just to give you a heads up that there are tools out there that can help you. And the best tool is something that can filter the noise. And that's why FinViz was the better of the sort of websites that I pulled out, because you can instantly see it. Now, the heat map, for all it's pretty good, I wouldn't rely on it. You know, it's just showing you what the conditions are at the point of what you're looking at, but they can change in a heartbeat. as we all know, because how many times do you enter the market and you think, yeah, this is the way to go, and it just rattles off the other way because you've sort of sold it at sort of the bottom while it's ready to bounce, or you've bought it at the top. And that's where sometimes a heat map can go wrong, because it'll show you this dramatic drop, but it's not showing you the bounce. Okay, and that's why I use a change of strength as well. And the analogy that I use is this: if something's very expensive, sort of in that case, the dollar, just for a hypothetical thing, it's very high, it's very expensive. I can see the change is not moving sort of over the last 24 hours, 48 hours, or a week, whatever you're looking at. I can see it hasn't really moved. That means it's plateaued out. You know, it's lost its value moving up. So if you're in a supermarket and you're running it and you see a product that's sitting there not doing anything, what do? You sell it off. You mark it down cheaper so it moves down. Okay. But likewise, you can have a product that's on sale and it is at the very bottom and it's good value. You might have like underpriced it, for argument's sake, and customers being savvy will jump onto that sale and they'll snap it up. All right. So just because something has lost a lot of ground doesn't mean to say that it's going to continue to be selling and selling. What it's starting to become is good value. It's value hunters, what we are as sort of Forex traders. So we then buy it when it's at the bottom. That gives you the bounce up. I hope that kind of makes sense in a strange, watered way. But if you think out of the box like that, you'll find your trading becomes a lot easier. It certainly made mine easier because it takes a lot of the decision processes out. Now, yes, I look at pretty much the same markets every day and I do put it into the strength and I rely on what it tells me, you know. But the first thing it's telling me is movement, not direction. So just as we wind this up, your strength can filter it into a little basket. Your little basket filters down into a time frame that you can look at to make a decision. And then that time frame filters down into a bias that you can trade. And that's how you work a strength out. So it's just a series of filters, and then the chart itself, regardless of what it says, is what you trade. And you trade what you see, not what you think. All right. So if you see a sharp drop down, a consolidation along a good level, you can see that there can be a bounce to the upside. Now, if you see a sharp drop down and the consolidation is very weak and you can see it's starting to sort of break through the level, well, then it continues. Again, it's just a series of filters. So I hope that kind of opens your mind a little bit. Do put your comments below because I do answer every single one of them. Also, next week I am on holiday. I'm going off on my little jollies in the sun, and I'm going to be doing an open Q&A while I'm there. So drop your questions below here or drop in the community section of YouTube. There is a post there where you can put all your questions and I'm going to compile them and you get your question answered and a little shout out, and I'll have a margarita and a suntan or a burn tan because I get burnt to a frazzle, as you saw me a couple of weeks ago when I was in Cyprus. Could do it all again in Turkey. So happy days. So do that and we'll continue this journey together. So as always, guys, trade well, keep your risk managed, use a filter, but above all, do what you love and the money will follow. See you all in the next one.